Institutional ETH has arrived, and this means some big changes in the market. Today, we're going to be breaking all that down with a special guest. You guys don't want to miss this one. I do want to thank our sponsor, and that's Tangem. We're going to be talking about Tangem today because I think there might be an interesting feature that will be available in self-custody wallets soon. But if you guys have not gotten into self-custody, this is the thing to do. It is one of the best and most secure ways to get into holding your own tokens. All you have to do is jump over to tangem.com. You can order the 3-card set. And of course, it's seedless by design, which makes this thing super secure. And it's also very easy to set up. So don't get scared that you think, oh, this is just too difficult for me, Paul. I don't want to do that. No, Tangem is very easy to set up. You will thank me when you get one of these going. All right, so today I want to bring in our guest, and the idea behind this was to take a look at institutional ETH and some of the features that are happening out there in the market. So joining me is Rand Hindi, who is the co-founder and CEO over at Zama. Great to have you, Rand. How are you?
Thank you, Paul. Very good. Thanks for having me.
Okay, so listen, a lot is happening right now. Ethereum is moving quickly into the institutional phase. This first X post, I wanted to kind of get your opinion on some of this. Institutional ETH finally live, as we're already seeing multiple platforms out there in the essence of institutional ETH. I want to get your take on the idea of institutional ETH launching in such a broad base right now. Where do you think this is going?
I think this is a right move. Ethereum for too long was focusing on small markets, I would say. Things that are obviously not currently moving the needle. If there is one thing that is a huge trend right now is the institutionalization of crypto. So, big financial institutions starting to use stablecoins, real world assets, moving a lot of finance on chain. And Ethereum is one of the rare places where they can do that with security. So it makes total sense. If they want to build use cases for trillions of dollars, then they need to focus on institutions.
Right now, there's 3 entities right now. So you've got ETH Labs, Institutional ETH, and then of course, now what we're talking about is layering in even the Ethereum Foundation into this. So this becomes much more broad-based. You look at this being backed by, you've got it right there, Bitmine, SharpLink, Joseph Lubin. I mean, these are pretty much legends in the ETH ecosystem right now. First of all, do you think this is going to have an immediate impact, or is this something that you think is going to work its way in to the market over time?
I mean, I've been in crypto since 2013, and what's happening right now is very different. It feels like the old guard has gone, and there's a new wave of entrepreneurs, of investors starting to come on chain through institutions and, I would say, traditional finance. Those guys backing them is just a testament to where blockchain is going overall as the future place where finance is actually going to be operating.
You guys are already starting to show some pretty significant growth right there on unique depositors. You can kind of see it. You guys follow along over on Dune Analytics on this as well. When you see this, and now you think about the thoughts of what's happening with OUSD, the announcement this week, the impact on other stablecoins, including Tether. I saw Paolo tweeted about it. Jeremy Allaire ends up putting out, a ridiculous post here. In terms of length, it's kind of a TLDR. It was trying to address a lot of the issues that the market was pushing back on. If you guys haven't been watching the Circle stock, it's been falling pretty significantly after this announcement. He said something, though, that was down here towards the end that I thought was interesting. It says, oftentimes when these things get formed, which he's talking about OUSD, everyone feels like they should just put their logo on the list, kiss the ring, interesting use of term, make noise about the openness, but typically those same firms will turn to their operating units and make the best decisions for their customers, which often means partnering with the market leader. So what are your thoughts about OUSD? Do you think this is going to be a market leader soon?
I think there is space for multiple stablecoin leaders. If you look at technology in general, there's always 2 to 5 companies which share the market. You don't want a single company sharing it.
Sure.
That's not good, I mean, that's the whole point of competition is you've got competitors. So the more people try to compete on a global scale, the better for users of stablecoins. It will force everyone, Circle, Stripe, Tether, to build the actual infrastructure that's needed. So I tend to agree with Jeremy, however, that consortiums rarely deliver the way that companies do because, honestly, of complicated governance. So it really depends whether OUSD, OpenUSD, will be a consortium or it will be a standard. If it's a standard, anybody can adopt it. Anybody can use it. It creates interoperability. It creates a level playing field. That's good. But that's not a threat to Circle, because Circle has something that Jeremy, again, talks about in his thread, which is important. They have distribution. They have liquidity network effects. You know how in social media we talk about network effects? When your friends are on social media, it's harder for you to churn because, well, you have nobody else on other social media to talk to.
Sure.
It's kind of the same with money. If the money is in one place, it actually attracts more money to that place. All that's to say that I don't think Circle is at risk, but I do think OUSD will be a major contender in a growing market.
Look at PYUSD, that's PayPal. I mean, that's kind of the ultimate distribution, but they've struggled to really get a footprint hold in terms of stablecoin markets. So I think the question is trust. Who is the market going to come in and trust? Who are they going to believe has the best stablecoin? Because let's face it, the Genius Act has made this somewhat illegal now for stablecoin issuers to actually pay you any interest on anything. So you're kind of stuck there. But then you have, this was Scott Melker talking about this, 140 of the largest firms in finance just organized to capture that yield for themselves with OUSD. And if clarity gets through, and this, talking about the Clarity Act here, that would pretty much close the loophole, which means I think they are either front-running the fact that Clarity is going to fail or they just don't care. I'm not sure which it is. What do you think about Clarity right now? Do you think this is going to possibly get through or not?
I really hope so. I think one of the things holding back the crypto market right now and keeping us in this sort of sideway state for a while is the lack of regulation. I think the U.S. making a clear statement through regulation that crypto is now finance and finance is now crypto.
Yeah,
that will. I think the crypto market is going to be nothing in comparison to what's about to happen as soon as the U.S. passes regulation. So everybody wants it. People want clarity. They want clarity in both senses, the regulation and the ability to operate without having to second guess what's going to happen in the future.
Yeah.
So if it doesn't pass now, I think it's just a matter of time before it does. It will happen.
Okay, well, I hope you're right. I guess in a way, I look at this and I think the strength of the banking community, this alignment now with all these organizations, now you've got a stable coin that somewhat is aligned with what the Genius Act was rolled out to be. So that in itself kind of kills the idea of privacy. And I know you're addressing that. We're going to talk a little bit about that here in a bit. But before we go there, I want to jump to the DeFi component because there's been some announcements with Metamask. And I've got a clip here of Joe Lubin talking about this. I want to get your opinion on this. Let's go to that clip.
It is my bias that in the traditional economy, there is essentially always an adversarial relationship between the corporation and their consumers or their users, making as much money as possible. That's an extreme statement, but in our world of decentralized protocols, is your ability to use stablecoins, use debit cards at I think it's hundreds of millions of MasterCard merchants worldwide. When I saw that number, I was like, can't be hundreds of millions, but it's hundreds of millions of merchants around the world. Your money is always being put in the best yielding situation automatically. If you want to engage in prediction markets and perps, it's also just one click. It's all sitting there.
Who is this particularly for?
I think it's going to be so compelling that there isn't anything that's going to rival it.
So what Joe is talking about there is this huge announcement with Metamask with yields at like 4%. They have obviously the credit card, debit card type model that's already built into it. Basically, it puts you as a consumer to become your own bank. Do you think that is the end of institutional finance or TradFi, who is charging you for these kinds of accounts out there of managing your own money? You even look at Steakhouse Finance, they even kind of mention this right here. the Metamask Money account live. You can go in and earn on stablecoins directly inside MoneyMask, curated. This is Steakhouse and Morpho. I mean, come on, these are very respected names in the market. What do you think?
It's interesting. So I'm originally from Lebanon, right? And in Lebanon, a few years ago, we basically had a meltdown of the local economy. And overnight, the central bank basically said, hey, by the way, all the dollars that you're holding in your bank account in Lebanon, well, they're gone. We're not going to let you take them out. And for the first time, people realize what it really meant to not own the money in your bank account. There is a gap in the market for self-custodial banking, which, if you actually think about it, is what banking was back in the days.
Right.
I mean, banks were just deposit boxes. You went and put your money and you could get it back. Somewhere in the 60s and 70s, we moved to like a fiat-based economy and everything became fractional reserves. And then now like your money is actually not in the bank, because the bank does stuff with your money to loan it, to do things, which again has enabled credit markets to exist. So there are benefits to that. The economy would not have grown without that kind of system. But people do generally want to own their money. And that's exactly what stablecoins, on-chain banking, self-custodial banking enables. However, it does have one problem. You can have a credit card, you can pay, you can earn yield on your money, but everything you're doing is transparent. Every time you're spending at one of those hundreds of millions of merchants, people know what you bought, they know how much you bought it for, where you bought it from. That is a problem. It does not make sense. There's a missing piece here, which is privacy. Unless you give people the same level of privacy as they get to expect from their existing banks, on-chain self-custodial banking will never be a serious competitor. You need a layer of privacy.
All right, so you're hitting on, of course, and I know you're talking your book, I get it, in the sense of what Zama does. And speaking of that, you can kind of go over and learn a little bit about Zama here. By the way, they're not a sponsor. We asked him on the show just to understand what's going on with ETH. But you guys, of course, are already partnered with Steakhouse, and you're doing something that, to your point, is very important, and that is this confidentiality idea. So the idea of going in and transacting in USDC and being able to shield those activities, that's essentially what you guys do. So how far into the ecosystem are you guys today? Is this going to be something that you think all players out there in the market are just going to adopt, and whether it's you or some other platform out there that's doing this?
The good way to think about what we built is a layer of confidentiality for financial transactions on chain. So you can take any existing stablecoin, any existing digital asset, an RWA, tokenized gold, Bitcoin, USDC, and you can turn it into a shielded asset where every future transaction you make, your balance, the transfer amount will be hidden. So people don't know how much money you have. They don't know how much you're paying. They don't know what you're trading, buying, selling, for how much. All of that basically becomes invisible, but it's all on chain. So you have all of the nice properties of public blockchains like Ethereum with the privacy that you would get from an off-chain financial service provider.
I see.
A good analogy, I guess, is HTTPS for financial transactions on chain, right? And HTTPS is a great way to think about this. HTTPS was invented for e-commerce. People back in the days of the internet did not have a way to share credit card information on this global public shared network, but they kind of wanted to. People wanted to transact globally. HTTPS as a way to solve that problem. And what Zama is doing today is basically the same thing for financial transactions on public blockchains.
Kind of the SSL of the new financial networks out there, if you look at how the internet has used this kind of tools set in the future. So I think this is one of the things that everybody's going to be looking at very soon. You have to remember, for most of you guys watching right now, most banks are not using this technology yet. It looks as though they're going to be using it very quickly. So you're going to see this confidential issue start to arise very quickly as you start to utilize this infrastructure, globally, whether it's on ETH or you're using stablecoins within your bank or outside your bank in DeFi. These kind of things are going to be hitting for sure. I want to leap over to Stretch for a second, because this, of course, has been on the top of everybody's mind right now with what's going on with MicroStrategy. They, of course, jumped their dividend to 12%. do you think people are going to trust Stretch or DeFi now? Where is trust being generated from?
Yeah, that's a good question. I think MicroStrategy as a vehicle for owning Bitcoin through equities made a ton of sense back in the days, right? If you had a 401k account and you wanted to buy Bitcoin with it, you couldn't, right? But then, we started to have the Bitcoin ETFs from BlackRock and the other folks. So the value of holding Bitcoin through MicroStrategy is not the same as it was 5 years ago. Quite frankly, I'm a little bit lost with the levels of financial engineering behind it. It's just very difficult unless you're really, really deep into...
Yeah, you're not the only one. You're not the only one. Trust me. We've talked to a lot of smart people.
I don't know, man. Call me old-fashioned, but I like when things are simple. Simple is simple to understand. You understand the risk. You understand where the yield is coming from.
Yeah.
And I think DeFi, interestingly, might be complicated for someone who's new because of the user experience. But the actual exposure and the actual risk model and strategy you're exposed to is fairly simple. Like, exactly what you're getting because it's on-chain.
First of all, I'm looking at your website. You've got a 12% APY right now in general. I mean, this is obviously going to be very, enticing for most. How long am I going to be able to get this? What does this look like long term? Is this something that you guys are going to be able to deliver on?
The vision we have for Zama is that we want this to be the place where you can access all kinds of on-chain finance products, whether you want to buy crypto or whether you want to buy RWAs or whether you want to put money into a vault curated by an on-chain asset manager. You should be able to do all of that confidentially. So people shouldn't know what your portfolio consists of and how you're rebalancing your positions. So you need trade privacy. You need strategy privacy. So this is really a primary objective of this. This first vault that we launched with Steakhouse is really more of a proof that you can earn competitive yields on shielded assets just as good as you would on unshielded assets. So the thing you have to think about is, if I can make just as much money on confidential USDC that I'm holding versus just plain USDC, why not hold your assets confidentially? And this is what we want to get to. We want privacy to get to a point where it's such a no-brainer that nobody thinks about it. It's just how you do it, because why not? There is no downside anymore.
Well, I think to your point, once people realize that, that's the real question. But again, it goes back to distribution. It's where, even though Metamask kind of controls the Web3 community and the crypto-friendly and native community to a certain extent, I don't even think that they get the crypto curious just yet. The crypto curious are usually at Coinbase or Kraken or maybe Gemini, somewhere like that, at least here in the US, Binance in the Asian markets. But I don't know. I'm still concerned as to whether or not we're going to see major adoption curves, regardless of the offering.
We will.
Think so? Okay.
It will not be by connecting your hardware wallet it'll be a different user experience. I think people are going to access those products through Revolut, through Citibank, right? Like, they're going to access it as they access existing financial products. DeFi is going up the stack to become more and more like finance, and finance is going down the stack to be more and more like DeFi. And somewhere in the middle, what we call on-chain finance, which is neither DeFi or TradFi. It's something kind of in between. You might have KYC permission product. It might be tokenized, but with someone issuing this token behind. All of that is going to happen in the next 4 years. So I don't think there's going to be DeFi versus not DeFi. I think we're just going to call that finance.
Let me jump over to this, because this also happened on Ethereum. UBS just tested their public Ethereum for banking. This really surprised me in the sense of that the test went very well. This is basically allowing a bank to use public Ethereum rails, bank level rule checks. You're going to get approved wallets, all that kind of stuff. What are your thoughts on this? I mean, do you think this changes the landscape of, because there's a lot of chains out there that are trying to do this very thing that now this is completely open on. So what do you think?
I think there's a very interesting sentence here when they say that it doesn't have to be on closed private blockchains. Back in the 90s, people were using something called intranets. An intranet was a network of computers within your own organization. It was private because nobody could access it. It was secure because nobody could access it. And you could connect your company's intranet to another company's intranet to collaborate. This is the same as having private blockchains in every bank talking to each other for interbank trades and settlements.
Yeah.
Ethereum, Solana, public blockchains are like the internet. One global public network, one global market, everybody can actually participate in. And if you look at the impact of the internet is what enabled e-commerce, Amazon, Google, it's what enabled ChatGPT, Claude from Anthropic. Like these things are running on the internet. And I believe that the key technology that enabled it was encryption, because without encryption, you wouldn't be able to send a prompt to ChatGPT without everybody seeing it. So here's a question. If you can have encryption on top of public chains like Ethereum, the same way you have HTTPS on top of the internet, how big is that market going to be?
Well, it's huge, no doubt. It is a monster market. And I think it's probably the one thing holding back most of the adoption curves that are coming. Of the people who don't necessarily know about it yet, for the people that are very educated on this, they understand it's coming and they understand there's framework already being developed on this, which brings me to the topic of ETH. If ETH gets into a situation where privacy now becomes part of the network, what does that do? Who are the biggest losers out there, do you think?
I don't think anybody loses. I think the market becomes 100 times bigger with privacy than without. So, if anything, we're going to be talking about trillions in on-chain finance in 4 years, like we're talking about billions today. And people casually say, oh yeah, I got $100 billion of TVL in my DeFi protocol, because that's going to be how big the market is going to be once we enable institutions, asset managers, traders to do so with confidentiality, with speed, with cheap fees, and access to a global market.
Yeah, for sure. I'm looking at what Aave has done. Aave Horizon, now one of the several initiatives enabling securities-backed lending. Okay, so let's just remember, guys, RWA-backed loans now in Aave growing consistently. And if we get security-backed lending at scale, what does this mean for someone like a Robinhood? Robinhood, of course, does this right now. It's a big part of their revenue. What do you think would happen to the traditionals out there like Robinhood around stock lending?
They'll do the same. I think, they'll look at this as a technology that can enable them to offer those products in a seamless fashion.
Well, they're offering them now just at higher rates.
You mean they're using DeFi? Yeah. So, they have to compete, I guess. That's good.
Okay.
It's good for the market. Eventually, people are going to settle where the market considers to be a sustainable rate. I wanted to say something about RWAs, because I think people are underestimating how huge that market is going to be. We recently announced a partnership with Apex Group, a huge asset servicing company. They have this protocol called TRX, where they're tokenizing RWAs. They already have $100 billion committed to TRX. So we're talking about one company tokenizing $100 billion. Like, this is a $150 trillion market starting to move on chain. RWA-backed loans is just one way that you can use those RWAs, but you can also package them into all kinds of different financial products. You could have a vault that gives you exposure to US real estate with an option hedging in case of like a market crash. Like, we're going to start to have derivative financial products on steroids. Like, we're going to see people deploy financial products and strategies with code, something that was impossible to do in TradFi. And this is precisely the value of blockchain, is composability, is programmability, is the ability to just launch something in an hour, not in weeks or months.
Well, I would agree with you. I think we are going to see all sorts of new instruments out there. It is just a matter of time. We're seeing that starting to show its face right now in DeFi. If you look at the Metamask announcements alone, and then you've got this right here with Nasdaq and Pyth. The Pyth infiltrating Nasdaq right now. What does this mean? What could this enable right now?
Nasdaq on chain? It doesn't get bigger than that if you're thinking about trading equities, We are starting to see the inflection curve. People have been talking about on-chain finance and tokenizing assets for sure. Almost a decade in crypto. It's not a new idea. There are three things that we're missing. First, the infrastructure wasn't ready. It was actually hard to tokenize an asset and to make it tradable in an easy manner. This has been solved by Solana with a fast chain, by Ethereum, by all the tooling, custodians, everything that exists to enable that at scale. The second thing that was missing was privacy, right? If you're a portfolio manager, you cannot afford people seeing your positions or solving that problem. That's basically done. And the final thing missing, the real catalyst, is going to be clear regulation in the United States. Until the US is officially open for business with crypto in a way that's simple, regulated, everybody can understand, follow the rules and you'll be fine.
Yep.
Nobody's going to take the risk, the regulatory risk of doing it. And that's why clarity is so important, or any kind of regulation. It doesn't matter what's in it. We just need something clear that we can follow.
And the fact that MiCA has already launched, I mean, this thing is now out there and available in the EU. One thing that kind of surprised me, well, it didn't surprise me. It actually, I was kind of delighted to see this, and that was the announcement from Backpack. They have now secured a MiCA license. So this is interesting because when you go down and look at the MiCA approved perp liquidity and perp platforms out there, you're going to see some pretty amazing ones in here. And the fact that Backpack is sitting there right now at one of the best rates with good liquidity, this could be very interesting.
Europe is great, but it's not as great as the US if you want to build a company today, right? And so until the US has its own version of MiCA, hopefully a little bit more business friendly, then we're still going to have this sort of glass ceiling of how big crypto can actually be. And what Backpack is doing is great. They're showing that even a startup can actually be compliant. So there's no excuse not to be. Again, until the US has a clear regulation, we're not going to get the trillions moving on chain. That is a catalyst. That is what takes us out of this bear market.
So that's the key, the US. And of course, right now, if we don't see clarity come through and there's still some pressure, because this is right now, and I won't get into clarity too deep because we do so much on that. It is a very complicated political landscape right now, and it's basically being money driven. It creates a big issue for probably the most important regulation that has ever went through DC, in terms of the capacity of growth. And that's the economy growth, the potential for the finance sector, which has been led by the US for a very long time. I want to jump back to T-Rex for a second, because this interests me in the sense of, could I ever see something like, let's just say Tangem or other hardware wallets, could I ever see privacy on that, confidential features, do you think?
Oh, for sure. I mean, anybody could integrate confidential tokens. We have a very simple integration, we have a tool that people can integrate into any wallet, any custody solution. It's very easy. It probably takes a day.
Okay, well, Tangem guys, if you're listening today, there you go. You need to connect up with Zama and get things rolling here, because that would be a cool feature. My last question to you is, I compare, so this is the Circle valuation right now. If you look at what their market cap is, market, of course, has been declining there for obvious reasons to a certain extent on the market, but also now with the OUSD announcement. My question to you is, do you think they're an acquisition target right now?
I don't think so.
You don't think so?
Oh, you mean buying the stock, not Circle being acquired? Someone buying,
Circle being acquired, yeah.
Oh, wow. I mean, sure, why not, I suppose. I don't think Circle is trying to.
Timing is everything, man.
I know, but I think Circle has a decent shot at becoming a massive company. Again, think about it. The market reacted negatively to OpenUSD launching because it's scary, right? You've got a major consortium of major players trying to take a shot at stablecoins. However, you have to take into account the stablecoin market is growing. So even if OUSD takes 100% of the existing stablecoin market, there's still going to be a tiny fraction of the future stablecoin market. So if you look at the size that Circle can grow to in absolute terms, there's a lot of room for them to grow. So I just don't see, if I was running Circle, I wouldn't sell. If anything, I would just double down on building more products, on being more aggressively partnering with people for USDC, taking just a position that it is the stablecoin that's listed on a US exchange. That brings a lot of value and trust.
Well, and USDC, obviously the lead stablecoin there in Europe under MiCA guidelines, so that too is going to be a big benefit. But I think it's growing into something that maybe is even more exciting and more mature. We'll find out very soon. Rand, it's been great having you on the show. Thank you so much for coming in today. We appreciate it.
Thank you, Paul.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.